I'm Robin Crane, and this is the Growing Your Financial Business the Woman's Way podcast. Listen, I was a financial advisor for over a decade, and I got so sick of the old archaic strategies that your grandpa used to get clients. What the industry teaches today is still so outdated and just doesn't work anymore. So I had to find a better way for myself, and then I got obsessed with sharing these how-tos with other women like me. The stuff I teach doesn't require giving up your life, your sanity, or your family time. I want women like you to have it easier than I had it, so you can thrive in the industry. I've now helped thousands of women grow their financial businesses to multiple six figures, some even seven figures per year. So on this podcast, you're going to get an inside look at how they did it so you can do it too. Let's dive into the show.
Welcome. It's Robin Crane. I'm here with Stacey Relton, and she's a transformational leader with a proven record of driving enterprise value and successful leading teams and directing integration during and post M&A transactions. So we're back to, like some of you might have heard, some of our podcasts on M&A, mergers and acquisition. And I think it's really interesting to have someone like Stacey here because of the transformational growth that she has helped her company. And then also, like, what can we learn from it, especially when it comes to buying and selling a book of business in the financial space. So let's just dive into it because, one thing you told me before we started recording is basically you took this company, you're a managing partner of Straight, and you took this company from, we're not going to say the exact numbers, but basically to a valuation of 10 times what it was in less than 5 years. Is that right?
Yes. It was a lot like driving a race car. Like you take a street legal car and then you put it on a racetrack, and then, you take off at 200 miles an hour, but the whole time you're doing it, you're having to upgrade everything on the car, right, to be a race car. So I swear I was constantly upgrading the tires or upgrading the engine or any parts systems in the company. It was every other month or every quarter, we were certainly clipping levels of growth that you have to then make, infrastructure upgrades to keep up with it. So it was super fun, but it was a lot like Evel Knievel. And so
when did you start this company?
I did not. My husband, John Relton, had actually started it in December of 2006. And so he had it for about 9.5 years. And
it's an private equity firm?
No, we're actually a fund administrator. So what we do is, and we can really thank Bernie Madoff for this, is when our industry really
I don't know where this is going, but I'm already laughing.
It's totally good. So, kind of the way people get away with a Ponzi scheme or Bernie Madoff, people like that, is there's no one really verifying the numbers and there's no one really checking to see where the money goes. So fund administrators had been an industry before that, but we weren't very highly used. And then after kind of, especially 2007 and 2008, investors became a lot more picky on, okay, if I'm going to write you a check, whether it is $100,000 check or $1 million check, then I need to know that, number one, the numbers that I get from you are the actual numbers, right? So if you say that my $1 million is now worth 1.1, is it really, and they have that verified. And then secondly, that the money is where it's supposed to be. So we make sure that if we get the money from an investor, and then we make sure that the fund manager, whether it's a hedge fund or private equity fund or venture capital or hybrid, any type of alternative investment, that the money actually goes into that investment. And then when that investment is sold, the fund administrator is actually the one that gets the money back from the investment and then does the allocations to say, okay, if you had 50 investors or if you had 400 investors, then here's how much of, each portion goes to each investor. And so we're kind of that third party. Even when a fund has a CFO, they will almost always have a fund administrator, because the number one question that a fund will get from an investor is, who is your fund administrator? And then who is your auditor, right? So they want someone doing the work and checking it.
And then your clients were hedge funds or private equity firms. Those were your clients. Yeah, I worked with this woman at the beginning, actually, when I first started working with just female business owners. And she had a $2 million fund administration company. It was like $2 million in revenue. And then I think she wanted to eventually sell her company for 10 million. She doesn't have numbers like yours, but, and then in 7 months, she sold it at 6 million. So we were pretty happy with that because she wanted to get it to 10 million. And it only took 7 months. She sold it for 6. And she was working in the company. Sounds kind of similar, where she was still then working for this company who bought her out. And then she still got a piece of the upside when they sold. And I don't know the end of that story, but I know she was working with someone like doing diamond stuff. Like she was just living the life because she's like, oh, that's so cool because I didn't want to stop working. And now I'm working in the diamond industry. And she's like, and I get to have all these diamonds. I was like, oh, that sounds like you, Denise. That sounds awesome. So you were a managing partner of Straight. And as a managing partner, was your job like really focused on the business growth, like changing the tires, as you said, like to keep upgrading infrastructure, and you're not doing like the back end, type of operations. You were really on the business growth side?
No, 100%. I was at the strategic level. I had started my career in audit, but only for like 18 months. So I had never, certainly could not do the work that any of my accountants could do, nor anyone on my regulatory compliance team, because I had a bunch of legal folks and they handle all that stuff. But I was really the person that led the strategic growth. So, I came in and looked at it and said, okay, what are we doing? What's working well? What's not working? We were like some small businesses where we kind of had multiple different service lines. And so, some were growing faster than others and some were more in demand than others. And really kind of looking at what our competitors were doing. I think, my number one strength has always been strategy. So I really came in and looked at the business and said, okay, here's where we are. And I might be known for kind of being the gasoline you pour on the fire when you really want it to get much larger. So I came in and said, okay, we're here, but I really want to be there. And okay, how am I going to get there? Because it's the chicken and the egg, right? And so looking at, like where are we getting our referrals from? And I placed a lot of emphasis on referral partners and how do we help them, right? Because you can't just have referral partners that it's give me. My thing was relationships. It's okay, here's my strategic plan for growth. Here's the types of clients we want. Here's, the growth rate that I would like. And I would set these targets and the margins, right? Because everyone at the end of the day, you have to be profitable. You don't want to grow just to grow. You actually want to grow to maximize value. And then where's that growth come from? And, for some businesses, it's referral partners. And then from some businesses, depending on what your business is, it could be from, more marketing campaigns or more different things like that. And so I really focused on relationships and said, okay, if we do a really good job, who do we benefit other than our clients? And for us, it was CPA firms, because it made it a lot easier to do the tax and audit work. And it was also the law firms, because they wrote the initial legal docs, right, for the funds. And then they were ongoing, counsel as the fund continued to grow. And so I stepped back and said, okay, which law firms, which CPA firms kind of align with us, both in, quality of work, number one, but also in size of client. Because if you're a small firm, you might really want the largest in the industry to refer to you, but you might not have the same client base, right? Mm-hmm. So you kind of have to look at that, where your business is today. And then I would say that's something you have to reevaluate as your business grows, right? Because everyone starts off small and typically starts off with small clients, no matter what your business is, right? That's kind of where you start. And then as you grow, you typically start getting larger clients, and more broad-based clients. And that may still align with your initial referral partners, or some of your business may, but then some of your business may align more with middle market firms or with large firms. And then I just started forming those relationships. And anytime I could refer them in, it was always a, hey, how do I give to them? Before it was, hey, what can you give to me? Right. Yeah. And so at the end of the day, you form a really good ecosystem And I think that ecosystem, you not only build each other's business, which is fun and rewarding and great. You work well together, so the client knows that you work well together. So, the client's not like, oh, am I picking multiple service providers that don't know each other or don't, work well together. And then you also, I think, make lifelong friends. I think some of my best friends are honestly those that I've made through work, just because we've done so much business together and we've seen each other's businesses grow professionally and individually as well. So,
That's
but
awesome.
yeah, I did all the strategy there and kind of really, grew our client base and type of client. Certainly expanded some service lines like regulatory compliance, and then really just watched market trends. And I think that's one thing that's important is there's so much you can do internal, from strategic planning to marketing to all of this. But at the end of the day, we all live in a global economy. And so, and especially at the national level, there's things outside that I think are going to affect your business. And as the leader, you need to make sure that you're not only looking internally, but that you're paying attention to that, because you might have to pivot here and there, right? Your focus may change here and there a little bit to stay in line with the market.
Awesome. So let me unpack some of that stuff. And I also want to say, like I said, in 5 years, but what you actually told me was that you guys sold the company in April 2021 for, we're going to just say, we'll call it 1X, right? And then actually a year later in 2022, you sold it. So you went to a public company and then back to private. Is that right?
Yes.
And then so it was like 10 to 15X multiple of that first X in a year, right? So, is that accurate?
Yeah, the majority of our payout was, and it kind of depends. So when you sell a business, you can sell it a number of different ways. When we sold ours, and it was to a public company, so the number is, fortunately or unfortunately, was made public. So we sold to Son Group, which was a London-based publicly traded company. And so we did that in April of 21. I stayed on, as is typical when you sell a business, they want the main operator to stay on. So I stayed on with them and became their head of North America. So I actually had the privilege of taking over their other 3 offices that were here in the US, and kind of creating cohesion and driving that strategic growth at an even larger level. So it was a fabulous experience. I learned so much and I'm so grateful for it. Thought we'd be with them, forever. But as I found out, any public company is up for sale if the investors choose to take it private. And so we had Apex, which was one of the largest worldwide, come in and actually approach our investors and take us private. And so it took about a year to get through all the regulatory stuff. We did get, we're fortunate to get a kind of second bite of the apple, but it was certainly not the way it was planned. So, but it was great.
And now are you out?
No, I chose to stay.
Oh, wow.
So I really believed in our people and really believed in our mission. And I really liked, I felt like when we sold to Son, we looked at, not only services and product alignment, but we really looked at values. And for me, it was how we treat our people and how we treat our clients. That has to be aligned, or I just wasn't going to be in the game. And that aligned perfectly. And then when Apex came along, it was a great opportunity because they had a really strong focus on technology. And Son was in 23 countries, and I should know this, but Apex was in 30 something countries. So altogether, we became the largest in the world. And Apex provided us with a lot of technology solutions and also just a lot of it. I thought we broadened our services going from straight to Son. But then now that we're Apex, there's almost nothing we can't do. I mean, we own a conference in our industry. We own, one of the largest hedge fund softwares in the industry. We own, lots of proprietary stuff. And then service line, it's kind of, we followed a market trend as we talk about this. Years ago, people would have a fund administrator, and then they would have a compliance provider. And then they would have, someone who did their loan servicing. And then maybe they would have someone who did something else. And what we learned is over the years, these managers don't want to deal with 10 different
Not many people. Yeah. Yeah.
And so in our industry, as you know, talking about following trends, a trend in our industry is that people are like, I want as few service providers as I can get, as long as I can get the quality. And so Apex had a great approach of, hey, if we can come into a client and we can provide the basic fund administration, which what that means is accounting, investor reporting, and all of that. We can provide regulatory compliance. We can provide loan servicing if they need it. If they're, international and they need, intercompany currency, multi-currency, transaction stuff, we can do that. And so it's a much more simplified working relationship with a client instead of them having to keep track of 10 different firms that do 10 different things. And so I like their approach, so I've stayed.
That's awesome. So let me kind of unpack this and then bring it to the listener here. So, if you're a financial advisor, I know with most of the women who come to me, they're just trying to get their next client. So it's it's almost groundbreaking when I talk to them about getting really clear on who is that one person that you want to, I call it cloning. Like you want to clone, and then we're going to get more of those ideal clients. So that's the simplicity of it. And what Stacey, is bringing here, brain fart there. What Stacey's bringing here is that, there's a lot more complexity to it, but it's what we can do is learn from big companies and companies that have a really high valuation, because you want to think like a business owner. You don't want to think like an advisor. As great as an advisor is, as great as as much as you care about your clients and your team, what I'm seeing here with the theme here that Stacey's mentioning is so does she. She cares about her people. She cares about the clients. And that is number one. And that's what most of the women who come to me, it's always number one. I never want to let down my clients. I want to make sure they're taken care of. Everybody's worried about the market. The market trends right now is that people are freaking out. Maybe they're getting used to it. Is there a recession? Is there not a recession? What is it going to look like in a few months? Is the market going to go down? Is it going to go up? Oh, yes, of course I should buy right now. But of course I don't feel like it because I'm scared it's going to get right. All that, that kind of environmental stuff that's affecting everybody and their mindset because everybody is a bad investor, right? So, but what I want you guys to take away from it is really thinking about some of these key things. And I'm going to just talk for a minute to kind of unpack some of this stuff. We all know as advisors, we don't think of them as referral partners. We call them centers of influence, like the COIs. Okay. Yeah. But I actually want you to, for a second, think of a referral partner instead, because this is the people who are making a lot more money than a typical advisor are the ones who are thinking big, just like Stacey, as far as an entrepreneur, as far as a business owner, as far as valuation. Now, if you're in this business as a financial advisor and you're growing a book of business, you should absolutely already be thinking with the end in mind. How am I going to exit? Is there a succession plan? And I'm not talking about do you want to give it to your nephew or niece, or do you want to give it to someone in your office? I'm talking about growth, baby. It's not just about the revenue you make right now. It's about you have the opportunity to sell your business. Now, when I was a financial advisor, I basically I had no clue. I was just trying to get by. I was trying to get any client, especially at the beginning. And then I got a little pickier and got a little higher end client. And I knew there was an opportunity someday to sell my business. But at the time, I sold it in 2015, but it was 2 times, typically it was 2 times recurring revenue, right? And then maybe 1 time if you have any other commission type stuff. And, I basically got 2 times recurring revenue. I didn't have a very big business, so it wasn't this gold mine, but it was something, which was cool because I was only in the business, about 10 years. Nothing like you, Stacey, but it was something. And I was okay, that was cool. And to get anything to go leave and jump ship when I had not planned on ever selling the business and I had no intention of growing a team, I had no clue. I was just trying to get by, was just kind of icing on the cake. This is cool. But now when I bring in financial advisors in and they're just thinking about what's my, where's my next client going to come from? We're really intentional with who that person is. And what I want you to think about is well, how can I get this to a valuation that's much higher than this typical 2 times revenue? And I was mentioning this to you before, Stacey, that I was talking to one of my clients who was going to buy a business. And I thought this is still how the industry is going. It's just we look at recurring revenue and it's 2 times, but it's not. It's a traditional business now where the valuations are real, where they're looking at EBITDA, they're looking at your actual assets, they're looking at the clients. And what you told me before we started recording, Stacey, is that they value different size clients at different levels, right? And so like the buyer is just a buyer, right? They're going to get picky about what do they want. Is it a match? Like you're talking about the referral partners, like, are they a match? Well, it's like the buyer is going to say, is this a match? Is this the type of personality of, clients that I want to work with? Is this the type of client? Do I want, 1,000 little clients or 100 big clients? Or maybe I don't want all my eggs in one basket and this huge client that if that one client leaves, like, okay, we're screwed. So being super intentional with how you build your business is going to allow you to sell it at a higher rate. And I know there's all this stuff with multiples, like this type of company. If it's an education company, get this multiple. If it's a tech education company, it's like 10 times the multiple or something crazy. Like it's like you add tech to it, maybe 5, but like you add tech to it, it's like so much bigger. But understanding how that works, because I don't think it's like a straight line anymore of just like, oh yeah, financial companies sell for this much and this times revenue, but it's more like looking at EBITDA and all that stuff. So I know I'm going on a tangent. I just want to make sure they understand like this is thinking bigger. This is the entrepreneur in you, or the entrepreneurial spirit that you have to pay attention to. And then all these things matter. So going back to just like even business growth, referral partners, let's not just think of them as centers of influence. I feel like what people, advisors think about is like, how can I, this is, opposite of what you said, how can I get more people or more centers of influence to refer clients to me? And what you said, Stacey, is like, how can I bring more value to them? And this is a theme. I talked to someone else, Mary Lyons, in a past podcast as well. It's like,
she's a friend of mine. She's great.
Really?
She's wonderful.
Oh, yes, she's so awesome. She's so awesome. Like that was a great podcast. So yeah, she was like, I would go to these meetings and I'm like, how can I give you so much value and who can I connect you with? And sometimes it might be a personal trainer. It might be someone that's not your traditional like COI, but she would be so intentional about serving them, connecting with them, becoming friends with them, but not friends like, oh, we're going to go hang out and have cocktails and I can never drive you to want to work with me. Like most advisors where they're just like, how do I get past the friend zone of, like now we're friends and I don't know how to try to get their assets. It's like, she was really intentional with like, hey, we're going to do business together maybe, and here's how it goes, but I'm going to try to help you. And then my expectation is like, I'll tell you what I do and see if you can help me. So I think that's like really good to look at it like referral partners. Like we win together, not like I need someone to refer to me. So I just talked a lot, but I wanted to break down, there's like so much more I want to break down there, but just anything to add just based on what I just said. So I don't, talk everybody's ear off here.
That's great. And you talk about kind of being, small and we're all like that in the beginning, right? In the beginning, I was like, I will take any client I can get, right? Any client I can get. It's almost like, you almost didn't care as much about the margins, because you needed to grow that revenue, right? You grow revenue to get larger clients, you get larger clients, to grow revenue. It's like the chicken and the egg, right? But there's so many things you can do even when you're small. And our founder had a great, statement, and it was, don't be the best thing nobody's ever heard of, right? Mm-hmm. So you can appear a lot bigger than you are. Come up with your value proposition and what sets you apart. And then I will tell you, you don't know the number of nights I like watched TV on the couch with a glass of wine and went on LinkedIn to find out, who do I need to be connected to? Right? How do I grow? I didn't have a marketing budget back then. So I couldn't go waving banners and attending conferences and doing stuff that some of my competitors were, but I could make connections on LinkedIn. And then I noticed that the more I connected on LinkedIn, and I would literally have a statement and I would just run a search, a very strategic search, and hit connect. And there's a maximum number you can hit each week. So if you will do this consistently over a period of time, you'll end up with, 15,000 people. And what most of your connections won't realize is that once they've connected to you, then they start seeing your advertising rolling in their feed, and they never even put 2 and 2 together. So I can't tell you the number of times I've been at a conference and people have run up to me and said, oh my gosh, like you're everywhere. Like I never really had heard of y'all until last month. And now you're all over my LinkedIn. And I'm thinking, that's because I sent a connection invite to you or someone did.
Yay, algorithms.
Yes, and you accepted it, right? And so I think there's nothing wrong with, when you're small, you're starting there and it is the next client. And then you can't immediately go from there to the $1 billion client, right? You go from there to, how do I take a small step up? right? How do I just get to that next level? And how do I get to that next level? And then finding out about valuation in your business. This is something I wish I had done much earlier on when I first stepped up to lead. I'll be honest and tell you it was something I did later on, but talk to investment bankers or whoever in your industry is known for putting kind of either valuing, financial services businesses or investment bankers, and they will tell you what they see in the market. And then you also have a relationship that if you ever do want to sell, you're not interviewing everyone kind of cold calling and interviewing and meeting them for the first time, right? Because it's it's like a lawyer. You're trusting them with the potential sale of your business. So start talking to them now. What do you see in the market? And then, put it on your calendar to catch up with them every 6 months, even if it's for 15 minutes or 30 minutes. What are you seeing in the market? What's changed? What's your advice? And you'd be surprised. They will give you more intel than you could research in weeks and weeks. So, we all start somewhere. Even if you don't have the budget, figure out your free tools. Figure out how to differentiate yourself. I agree 100% with Mary. She and I've had many conversations about this, but like you said, it's, hey, who do you need to know? And that used to be and still is one of my first questions is, who do you need? Who can I introduce you to? And they'll tell you, I really need more bankers in my portfolio of my, centers of influence or my referral partners. I really wish I knew more attorneys that were in this specific space. And so if I can just email them afterwards, and good people know good people, by the way, and that's how I built my business, is like, if I knew when Mary and I met, we were both like, oh my gosh, you're going to be a powerhouse and you're going to be a powerhouse too, right? So I knew that anyone that Mary referred me to, I could trust would be a good person, a good referral partner, right? Mm-hmm. And likewise, if I make an introduction, my network knows it's going to be worth their time. It's not just going to be some random person that I looked up on the internet.
I think a huge theme here is think bigger too, because it's like, well, think bigger. And what I mean by that, it's like, it can't just be about getting the next client. Like it can't just be that, which is really hard, especially in where we're at today and like where the economy is and I'm going to say everybody with the quote, because you're not struggling, but a lot of people are struggling at this time, but which just means there's more value that you have, right? And if you're in this place where you feel like you're struggling how to get your next client, well, yeah, if then we start throwing stuff at the wall, see what sticks. And it's all about taking a step back and being more intentional. And, I read in your bio, I didn't say it, but like how you suggest like having a 1 year, 3 year and 5 year plan. Like I'm really bad about that. I'm really bad about like planning in general. Like I'm an action taker. I'm just like, instead of aim, fire, shoot, I'm like, shoot, trigger, I'm very trigger happy. Just shoot. Yeah. So like, entrepreneurs are very much like that. Right. But what I've been doing recently, cause my big theme here is like scalability. And like, I want to get to a point where, right now we have some scalability, but we're definitely like just hitting ceilings like those. And a lot of the listeners don't do Facebook ads and things like that. But like, there's been a lot of changes in that area. Now AI is the big thing, and it's like, how is that going to shift? And being ahead of the curve instead of behind the curve and thinking about, okay, well, what do I really want? What does that look like? Where am I trying to go instead of just make my next buck or get my next client? Because I really do think the industry has taught you just to like get as many clients as possible. It doesn't really matter until you get to a point. Like it doesn't really matter what the quality is. Like it's just volume game. But you bring on smart entrepreneurs like you, like Stacey, and you're like, oh, like she had to be intentional, right? And intentional is a really good word for women. And I think in general, just for business, it's like, this is an intentional game. This is not like as much as I aim, or fire, and I don't really aim. I'm intentionally being intentional with where I want to focus and how I'm going to grow this and what do I actually want. And if I'm going to want, like, depending on what I want, that's going to be different with how I surround myself or who I surround myself with and who I want those, even if I'm not thinking referral partners, but just like connections, right? I forget the woman who wrote the book, but it's like your net worth is your network. right? And I always talk to my clients about up-leveling their network, and LinkedIn is a great place. Now, everyone's inundated with LinkedIn. People are freaking out about LinkedIn, like, oh, everyone's trying to sell me stuff, which means you have to up-level your brand as well. Like, you can't just be like, have on your profile that's like, I sell insurance and financial planning services, that does not differentiate you from anyone else. And then you're trying to like talk to, the Stacey Reltons of the world, right? Like, you have to like show that you have some credibility and you have something to offer as well. So, but it doesn't mean you let perfect get in the way of perfection either. Stacey's like, okay, doesn't mean you go for the biggest clients. It doesn't mean you have to start somewhere, and you have to, just up level a little bit, Let's go after like a little bit higher end client. Who are the people? Is it just CPAs and bankers and stuff? Like, let's get creative and think about who might also be touching that client so that you can put yourself in the right situation. So I think all this is really huge.
I think one thing, Robin, that's really important, and I've seen some financial advisors who do track this, and I was like, oh, that's genius. But like, who is going to be an ideal client that might not be an ideal client today, right? So some people choose a specific industry. Like I have friends that are financial advisors, and they really focus on healthcare, or others who are really broad and they'll work with anyone. And some focus more on women or more on this. But you're looking at when does a small client become a big client? M&A. So are you watching who's an EO? Entrepreneurs Organization, right? Are you watching who is in Vistage? That's another group that a lot of leaders belong to. Are you watching, the people that are there? Because those people one day probably are going to sell, right? And then you may already have a relationship with them, which ideal if you do, right? If you start that relationship now, so that when they come into the money, it's not a random cold call of, hey, you sold your business and I now would like to do your financial, planning, if that makes sense. So, but I think there's ways to look at it like that of, okay, this might be a small fish today, but when, what would be the small fish that could become the big fish, and look at really forming relationships in those groups. And it's hard to do everything at every time. So I found that time blocking, and I'm horrible at it, I'm the worst at it, but I would say, okay, I'm going to designate this amount of time to those immediate wins, right? Like, I need quick business, quick sales, I can get them in. I'm going to designate a certain amount of time to really building, my current centers of influence or referral partners, or making X introductions, and then I'm going to spend X amount of time on futuristic, right? So maybe getting to know the clients that, they're small, they'd be okay clients today, or the prospects, right? Potential clients. But they have a potential down the road to become really big clients. And so I think if you kind of look at it in 3 segments, then it makes it a lot easier to digest. And just weekly goals, right? Or monthly goals. Like, it doesn't have to be as big as a year out. It can be, hey, here's what I'd like to do, but I'm going to break it down, and I'm going to commit to doing this month, or this week, or this quarter. And then you get some wins under your belt. And then those big goals aren't as unattainable as they sounded at the beginning of the year.
That's awesome. Yeah, I actually have a marketing plan I'll give you all. I just was looking up the URL. You can go to femalefinancialadvisors.com/marketing-plan. That would get the 7-step marketing plan. But you just reminded me of it, because one of the things I talk about is that, again, in the industry, they're just telling you, like, they don't tell you anything as like a short-term marketing strategy, a mid-term marketing or medium-term marketing strategy, and then a long-term marketing strategy. For example, they'll just say network or build centers of influence. Like, we all know that centers of influence is probably not going to be the most immediate, like you said, but everyone wants to build centers of influence because then you'll get a ton of referrals at once, right? It's same like as talks. Like, you're not going to necessarily get a talk tomorrow, but if you get a talk even in 3 to 6 months, you'll probably get a lot more clients than you would just going one-off to networking events, right? And so I have this little like plot chart, right? So it's like, people often think like networking, because this is what they teach in the industry. You're going to go networking and all of a sudden you're going to get a client from networking. Like you might be lucky if someone's in that, I don't know if you know that Chet Holmes pyramid, but in the 3%, like ready to buy, right? You might get one person, but typically networking is actually a long-term play. Like you got to build those relationships, and everyone's going like, I just went to 10 networking events this month and I didn't get any clients. You're like, yeah, duh. Like it's not a short-term thing. But if you have like a LinkedIn campaign that's trying to get you appointments, you're going to get some of those 3%, and that could be short term. But you're also very strategic about, well, who are the people that I want in my network long term? That's I'm not trying to get as a client. I'm actually trying to get them like to be in my network. So eventually get people they know. Like, I got to interview Mel Robbins, and so like just knowing Mel Robbins got me to people like Grant Cardone and stuff. They're like, I didn't even necessarily, I wasn't very smart. I wasn't that intentional. I was just like, oh, she's really cool. Let me interview her. But I lucked out because I put myself in this position to be with someone like Mel Robbins. And then that got me like a bunch of different opportunities because I was highly positioned. Just now I can say, oh, now that I've been on, a podcast with Mel Robbins, it's like, I look cooler just because she became way bigger. Like Grant Cardone got way bigger since I was on his network and things like that. So that's a lot like what you're saying is like, I recognize in people. So, and they were already pretty big, but like got into this network where it lifts me higher just because now I'm, in somewhat proximity of them or associated with them. So that is something I think financial advisors don't ever think about. And it's like your brand and who is going to determine what your future really looks like. So this has been huge. Like we kind of took a turn for the better, I think, of like how this really relates to them. But they needed all that pre-frame to understand your background and like how you can think like a true entrepreneur. The valuation, M&A, thinking about like selling your business one day, that you have to be thinking way, way bigger and then position yourself today for a big win tomorrow. So that was huge. Any last things to add and tell them where to you?
Gosh, I feel like the one thing I would say is networking events. We all get invited to like so many. And you'll notice like the more people you know, the more you get invited to. And in the beginning, you're like, I'm going to go to everything. Like I would hit 2 and 3 in a night, right? Like I would try to go to something at 4:30 and then I'd try to be at something at like 6. And then like I'd try to catch a tail end of something. And I ended up, it was great. You can only do it so long before you burn out. But then I had to start being more intentional with networking, right? Who are the attendees? If it's an event I've been to, and these two events typically have 90% of the same overlap of people, then maybe I don't go to both events. Another secret is you don't have to stay at an event the whole time. I will tell you, the more the business grew, the less time I had to go to networking events, but I needed to at least stay visible. And so I was a master at kind of the Irish goodbye. So I would come in and I would shake hands and say hello and hug everyone that I knew, meet a couple of new people, make my way through the crowd, and I might be gone in 30 to 45 minutes. Nice. And so kind of keep that in mind of remembering that the one thing that you're limited on is time, right? So how you spend your time, spend it in a way that maximizes the results. You want to do a little bit of everything, and then don't be afraid to pivot or ask others for help. If something's not working, find a mentor in the industry or talk to, an investment banker or someone who knows a lot in the industry. And then don't give up and don't think it's perfect. I can't tell you how many things I tried that didn't work at all, right? But there were so many things that did work, obviously. So you're not going to be perfect. You're going to stub your toe. You're going to go all out on this one effort and then, not get anything from it. But then you're going to do something small and you're going to get 3 amazing new clients. And so just know that it's, one step at a time and you grind it out. That's what you have to do is you grind it out. And my mentor, I think the best advice ever given to me, and I say this to this day, is I had a coach years ago, a career coach, and he said, he was a former boxer, and he said, boxing matches are not usually won in one punch, right? So there's no magic bullet to success. There's no magic formula that you're just going to do this and immediately go from here to there. And he's like, it's one step, one punch, one round at a time. And I have had to tell myself in times that are great and in times where I was like, oh my God, I lost the last 4 deals in a row. I can't believe I did that. Like, I never do that. But then really going back and saying, it's like a boxing match. It's got to be one step, one punch, one round at a time. And if you will keep with that level of consistency, which is probably a word we should have talked about throughout this, but keep that level of consistency, then that's how, you win by the end of the matches. So awesome. That's my last piece of advice.
Good advice. Good advice. Awesome. So tell them where to find you.
You can find me on LinkedIn. So if you search Stacey Relton, there's only one of me. So I should only come up once.
One and only.
One and only. And then also, I'm happy to give out my email as well, if you'd like for me to do that. And that's my first name. It's STACEY .Relton, RELTON @gmail.com.
Awesome. That's so sweet. Okay. Well, thank you so much. That was great. I appreciate it. And we'll see you all next time on Growing Your Financial Business the Woman's Way. Bye.
Absolutely. Good luck. Bye.